Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The GST Council lowers taxes on electric vehicles and charging apparatus, giving a leg up to the industry. ICICI Bank bucks the trend in the first quarter, sees asset quality improve and lowers provisioning. Dr. Reddy's is expected to see single-digit growth in its revenue and profit figure, with new launches aiding sequential growth in the first quarter. And it's B.S. Yediyurappa takes oath as the Karnataka Chief Minister for the fourth time. The Speaker disqualifies 14 rebel MLAs who will challenge the decision in the Supreme Court. Well, let's take a look at the trade setup for the day. It's an interesting week. I think that's what you got to keep in mind. But first, what happened in the week gone by? For Wall Street, frankly, it was a brilliant week because S&P 500 touched all-time highs. You had NASDAQ 100 touching all-time highs and being above 8,000 for the first time ever. And the US GDP numbers that came out in the week beat expectations. It's the longest GDP expansion in the US history, record 121 months. So it was a fabulous week in terms of both the market and the economic data for the US. Unfortunately for Asia, as the day is beginning, it is not starting off on a really good note. So US markets may have done what they have done. We have a start which is scheduled to be in the red. The SGX Nifty 2 indicating a start which could be marginally in the red. And there were various reasons for it, and I'll get to that in a bit. Maybe because of how important the week, how crucial the week is and uncertain the week is in terms of economic data globally might be weighing in. But first, what our markets did as well. Remember, while it was a great week for the US markets, for our markets, not so much because it was weak results and weak commentary from a bunch of companies which kept the indices under pressure. Friday may have been a good day. For the week, we ended about 1% lower. However, the Nifty is trading at key support levels on a number of indicators, including the RSI indicators. And that chart will tell you that if you just look at the RSI indicators and that small marking that we've done, it will show you how we are trading at some key support levels from where usually we've tended to bounce back. There could be some overshooting, but these are around the levels from where we bounce back. We've seen a bit of that bounce in Friday's trade. Let's see if there is more in store in the session this week. Frankly, I mean, some bit of policy support, and I'll get to why I'm talking about policy support, but some bit of policy support, if a couple of deals get struck for some of these financial names, then all of that could improve sentiment meaningfully in this week. And of course, the US Fed meeting would be a key monitorable, and I'll get to that as well. Why? Because this week is very important. But keep in mind, FIs continue to sell. Even in the last session at about 1,503 crores that they've sold out. The last 5 days have been large numbers. Save for Thursday's trade, we've had a number northwards of 1,393 crores each of the last 5 days. That's not small selling really, that's just continuous large quantum of selling that we're seeing in our markets. But it's a busy global week. Today, the US trade representatives go to China for the first face-to-face high-level conversations on the trade negotiations. So this is a very important one. Tuesday would be the BOJ policy again. The markets would be looking for reiteration from BOJ about whether they intend to keep rates low and give support for a long time. So I think that becomes very important. And Wednesday is the all-important Fed rate decision. Arguably for the first time in a number of years now, we'll all probability have the Fed cutting rates. The quantum is a debate now. The action isn't, but it's an important one. So Wednesday arguably is the most important decision. But today, tomorrow, and then some economic data coming out on Friday is all very important from a global perspective, to be honest. However, as I said, so maybe the globe will remain a bit circumspect in light of all of these potential developments. And therefore, we'll start off lower or maybe marginally flat. The question is, what do individual stocks do on a day like this when we are likely to start off lower in trade? Firstly, ICICI Bank. The results were in line with estimates with better asset quality. They maintained the advance and deposits growth that remains strong. Business growth highest in 14 quarters. The management says that there is no loan growth target. Will aim for profitable market share. But I reckon that the markets could take this number and this verdict well. So do watch out for ICICI Bank. That is an important one in the session today. Moving on from ICICI Bank, there are 3 or 4 other names, some results based and some otherwise. Some numbers like Havells were below estimates. The Lloyds and the switchgear business impacted financials for Havells. Let's wait and watch how this one reacts in the session today. Weak results by and large for companies like TeamLease, Music Broadcast and Escorts in particular. TeamLease had a margin downtick. I don't know if the street will take that well. Marginal downtick, but still it was down. Let's wait and watch if the street takes it slightly poorly. Andhra Pradesh government has cancelled orders for power mech projects worth 572 crores. Of course, the projects were not underway, so the company said that they do not give a big financial impact. But I think the street gets concerned about such things. So let's see if power mech were to react in the session today negatively. And Tejas Networks, the last few days, the stock has been clobbered, was down 20% on Thursday, 18% on Friday's session. Now, a bunch of global funds have sold out. The interesting thing is HDFC Mutual Fund has bought about 3.26% stake at about 84 rupees a share. Let's see if that brings about some reaction for Tejas Networks. And we'll of course monitor for all the auto names. We'll talk about it on first word sound, dwell too much on it, but a lot of reasons why autos are in focus, so keep those in mind. Last but not the least, I just want to draw our viewers' headline to this particular front page story from the Economic Times, wherein they are talking about two key things. One, Nirmala Sitharaman is not a conciliatory tone, but maybe just trying to soothe some frayed nerves that it is not the government's intent to hit FPIs. That's a big one. And somewhere down below out here, she's saying that a significant rate cut would do a lot of good to the country. So there are two very big things that the newspapers are reporting today. It'll be interesting to see if the markets take cognizance of that. So lots of things to monitor, and we'll of course do all of that on today's show. Let's tell you what's lined up on First Word today. That's how we start off with the collection of the top editorial stories that we believe we should bring to you. Shefali Malik Johnson to tell us what's helped ICICI Bank buck the trend in Q1 FY20. Somit then Johnson to talk about Vodafone Idea's patchy connection. Yatin Johnson to fill us in on the government's measures aimed at reviving the auto industry. And as Nikki and Johnson to take us through the Bloomberg Quint Cement Dealers Survey. As the month comes to an end, it will be important to see what dealers are feeling about the next month and what they're saying about the month gone by. But we start off with the big earnings that came out in Friday's session. ICICI Bank has managed to pull off what very few of its peers have managed to do in the first quarter. The private sector lender reported a drop in its NPA figure and provisioning. That's not all. I mean, a lot of other interesting tidbits came out from the numbers. Shefali Malik is standing by with the details. Shefali, good morning. What stood out in ICICI Bank's numbers and the fact that they've said that we're not giving a guidance, but we'll aim for profitable growth?
Good morning, Neeraj. So first to start with, the asset quality was good. Their overall numbers looked good, and they should be taken very well by the street, considering that, you know, some of the other banks are being cautious, results are slightly below expectations, etc., or just meeting. So their numbers have actually been very good this time around. The slippages have reduced meaningfully. Their BB and below book has come down substantially from 15,000 crores versus almost 25,000 crores last year. So a 10,000 crore piece improvement that they've seen there. And the numbers were, the profit was very marginally below expectations, mainly led by a fall in the other income. But if you exclude that, the numbers were quite robust. Their loan growth was also strong in the quarter, about 18%. So that's a very big positive, because we were anticipating somewhere around 15% growth as far as domestic loan growth is concerned. Retail loans grew very strongly by about 22%. The deposits growth as well grew by about 21%. And here as well, we saw the clear trend of the bank moving from focus on CASA to term deposits, which grew very strongly by about 34% on a YY basis. And the business growth, that is advances and deposits put together, were the highest in 14 quarters. So that again was a key highlight for them this time around. Margins in line with the expectations at about 3.61% versus 3.19% on a YY basis. And yes, they did say in the con call that they are not targeting any particular level when it comes to the loan growth, but they are aiming for profitable market share, which makes sense because in the current market where there is some amount of uncertainty because of the macro environment, they are going for the profitable market share. And also one interesting aspect that they told the analysts in the con call is that they are targeting a higher rate of growth in the SME portfolio. So that will be interesting to look forward to. And when it comes to the unsecured retail book, that is just about 8% of their total loans. And within that also, going forward, they would just be targeting the existing customers, exactly what the Bajaj Finance also told us.
So Shefali, if I were to ask you, based on what the expectations were and post the delivery and whatever little commentary you could hear from the management, what is that one thing that has stood out?
Well, one thing that has stood out is the overall confidence on the asset quality, and also the fact that they are saying that they would continue to focus, or going forward they would focus on the profitable market share and not necessarily going for an aggressive growth rate.
Well, okay, Shefali, thanks so much for putting that into perspective, that ICICI Bank, and I think post-Axis Bank's number, it'll be important to see, or interesting to see, if indeed the corporate-facing banks, which hitherto have had their shares of downticks due to various reasons, are actually sounding a lot more sanguine and bullish and optimistic about the next 12 months than maybe the retail-focused banks. It'll be very, very interesting to see if indeed that happens, and we'll get to know post-Axis Bank's numbers and then try and see if there is some bit of matching to some kind of confidence that these banks are showing up. But very interesting, as Shefali said, maybe the street will take ICICI Bank's numbers well. We'll get to know about it at 9 a.m. or 9:15 a.m. But if ICICI Bank did well, any hope of Vodafone Idea share price rising above its face value seemed to be dashed for now. The telecom operator reported a weak set of numbers in the first quarter of FY20. New accounting norms only managed to cushion a small part of those exceptional expenses. Somit Sarkar is here with the details. Somit, morning.
Good morning, Neeraj. So I'll start off with the headline numbers that the company has actually reported in the first quarter of financial year 2020. So if you see the revenues of the company, they were down by nearly 4% to close to 11,270 crore rupees. EBITDA saw a jump of nearly 104% to close to 3,650 crore rupees. The company's margins expanded to 32.4%, while the net loss amount came in at close to 4,882 crore rupees. Now, operationally, one might see a 100% jump in its EBITDA, but that was because of two factors. First, it was the adoption of Ind AS 116, and secondly, it was the merger synergies. So as you can see here, the reported EBITDA of Vodafone Idea was close to 3,650. Now, of this, 2,410 crore rupees bump up came because of Ind AS 116. So if you remove that, the adjusted EBITDA of the company was lower at 1,240 crore rupees. Now, in the press release, the company mentioned that the costs were lower by nearly 1,480 crore rupees because of the merger synergies. And if you remove this from the adjusted EBITDA, the core EBITDA of Vodafone Idea was negative at 240 crore rupees, and this is for the first time in the last 3 quarters it has turned negative. In fact, it was falling in the last 3 quarters from 387 crore rupees in the third quarter of financial year 2019. It has now turned negative to 240 crore rupees. Now, two factors which have led to this: firstly, it is the declining revenues because of the fall in subscriber base, and secondly, because of higher cost. Now, this decline in revenues did aid the company's average revenue per user, but the fall in subscriber base was so steep that it could not lift the company's revenue. As you can see here, the company's revenue were down by nearly 4%, close to 11,270 crore rupees, and compared to last year where the number was close to 12,944, it has come down to now 11,200, and the subscriber base has reduced to 32 crore total subscribers from 43.5 crore subscribers a year ago. Now, if you see the telecom operators 4G subscriber base, now that has increased to 8.5 crore. However, the pace of addition of these 4G subscribers has slowed down for the company. In the first quarter of financial year 2020, the company has added only 41 lakh 4G subscribers, which is the slowest in the last 1 year. Now, why is this important for Vodafone Idea? Because 4G subscribers are the ones who use data and are higher revenue generating customers. So a slow addition of 4G subscribers could further pull down the company's ARPU and its total revenue going forward.
Somit, was this a line-by-line performance downtake, or were there some exceptional items that also hit the performance?
Well, there were some exceptional items, and because of this adoption of Ind AS 116, the company's net loss was also lower by nearly 120 crore rupees. Now, the exceptional items, if you see, the total exceptional items worth around 807 crore rupees were there in this quarter because of integration and merger cost, provision for additional depreciation, and because of some amortization costs related to the payments bank of the company. Now, if you see, Vodafone M-Pesa was stopped during the quarter, because of which the company recorded an impairment loss of close to 50 crore rupees, while the Aditya Birla Idea Payment Bank was also shut down, because of which the company reported an impairment loss of close to 160 crore rupees. So the total exceptional loss in this quarter was close to 807 crore rupees, and the total net loss adjusted for the Ind AS 116 benefit was widened at close to 5,000 crore rupees as against 4,800 in the last quarter. Now, other key highlights from this quarter was the company's revenue. The revenue rose nearly 4% and to 11,270 crore rupees, but it was 500 crore rupees below what the analysts were expecting. The ARPUs rose nearly 4% at close to 108, but 4 rupees below the analyst estimates. Analysts were estimating the number to be close to 112 rupees. The churn ratio, however, improved for Vodafone Idea, close to 3.7% versus 7.2% reported by the company in the last quarter. And the company has also managed to achieve nearly 70% of the synergy targets in the first quarter, which is again a positive thing coming in for Vodafone Idea. Lastly, if you see the capital expenditure during the quarter stood at close to 2,840 crore rupees, and for the full year, that is FY20, the guidance is close to 16,800 crore rupees. While on the negative side, if you see the company's net debt, now that has reduced by only 19,130 crore rupees, and this is despite the fact that the company had brought in nearly 25,000 crore rupees via rights issue, which shows the kind of cash burn that is continuing to happen in Vodafone Idea. As you can see, the debt has reduced by only 19,000, and despite the fundraise of nearly 25,000 crore rupees, which means that 6,000 crore rupees was the net cash burn done by Vodafone Idea in the first quarter of financial year 2020.
Oh, that's steep, and a lot of people would argue that the stock has now reached levels from where it could be attractive. It's below face value. But hey, look at the results that tell you why the stock is trading at the levels that it is trading at. Soumen, thanks so much for putting that into perspective. Again, keep in mind, bad results need not mean that the stock will necessarily continue to do bad. Maybe some people might think that this is in the price, but the results don't inspire any confidence, at least out here when we try and look at those numbers. So you got to take that argument about pain being in the price with maybe a pinch of salt. Moving on. Autos in focus today. The government's given the ailing auto industry a push from the back, be it lower taxes on electric vehicles or the proposal to implement stricter scrappage policy. However, new registration charges have been inched up as well. So there is a bit of a mixed bag. Yatin is Mota here to talk about all of this in greater detail. Yatin, some good things, some noble causes, but none of this will help. None of these benefits will, I believe, help the automakers directly.
Yeah, clearly, Neeraj, apart from the electric vehicle tax, nothing really helps the automakers. In fact, the electric vehicles also, if you look at it, most of them are in testing phase. So not really a GST cut was needed at this point in time, given the low base, the low amount of sales, most of these auto companies do. Now, if you look at the GST Council, the overall electric vehicle, GST has been reduced to a level of 5%. Earlier, this was 12%. And if you look at electric vehicle charges also, the 18% GST stands now reduced to 5%. So a great amount of incentive as far as electric vehicles are concerned. Electric vehicles would mean electric buses, electric cars, as well as electric two-wheelers. So irrespective of the category of the vehicles, all electric vehicles do enjoy this particular GST cut. If you look at the Society of Electric Vehicle Manufacturers, they also have been talking quite well about this particular move. They do expect that the government intentions are very clear with respect to promotion of EVs, and this is one of the measures which was expected as announced or proposed in the budget few months or few weeks back. So clearly the industry is happy. Now let's talk about the companies which directly benefit. Remember, Mahindra & Mahindra long back had acquired Reva, which is now Mahindra Electric. So Mahindra & Mahindra directly has a division of electric vehicles. Along with that, Tata Motors, both of these companies have been competing with each other with respect to the government tenders which were floated recently with respect to supplying electric cars to the government agencies. So these are the two companies which already have products in line. Hero MotoCorp does benefit because they are one of the largest investors in Ether Energy, which is a two-wheeler electric two-wheeler maker. So Hero Moto is there. Bharat Forge, again, they have investment called Tork Motors. There, they have been working with the company for developing electric motorcycle. So Bharat Forge is one of the beneficiaries indirectly at this point in time. Ashok Leyland already is rolling out electric buses for the Gujarat government. So they also have products as far as the electric vehicles are concerned. Now moving forward, companies which do not have electric products are namely Maruti Suzuki as well as Bajaj Auto. They don't have any direct indirect investment also for the electric vehicles. But Maruti in the conference call last week said that they are already testing 50 prototypes electric vehicles which have been developed by the company across India in order to see the landscape, test it in various regions, various road conditions. So Maruti is already talking about an electric vehicle which could be launched in the next 12 months or so.
Okay, so one is the EV format, Yatin, but multiple other things, right? I mean, this scrappage proposal and the new registration fees is the talk of town. I didn't know that my one tweet will also get so much of recall because so many people are involved in this discussion about whether it's a good thing or a bad thing, but it shouldn't be a good thing for the automakers.
So, Neeraj, earlier the scrappage policy was proposed was in a different format. Now the government says that when you scrap your old vehicle, you get a scrappage certificate from a government registered agency or a recognized agency, and in lieu of that certificate your registration charges are waived off. Earlier there was a talk that the government might give you certain fiscal benefits, which includes a GST cut or a tax cut on buying a new vehicle, but that's not proposed. So these are the proposals which have been given by the Ministry of Road and Transportation, which falls under Nitin Gadkari. And these are proposals. Remember, these are not the final rules. If the industry opposes, if the customers oppose, if the market conditions do not improve, probably there could be some softness ahead. But these are the proposals, and mind you, that they have been looking to not only give no registration fee certificate for scrap vehicles, but when you have a fitness test for vehicles older than 15 years, there also you have to get a fitness test instead of 12 months rather than 12 months you have to get it in 6 months. So that is also some hard steps coming in for older vehicles that the government really wants to impose and force you to basically scrap vehicles older than 15 years. So that is something that the ministry has proposed. Now, two brokerages that have spoken about the scrappage policy and the new registration fee. First is Morgan Stanley. They do believe that since 1992 to 2003 period, which is basically 15 years back, nearly 12 lakhs trucks and commercial vehicles were sold, and probably 10 lakh vehicles are right now on the road which are eligible for the scrappage policy, and this might probably provide some demand stimulus to commercial vehicle players probably in FY20, FY21. Because a volume fillip from the scrappage policy will come in. Also, if you look at Nomura, they have said that the higher registration fee will clearly hurt demand at this point in time. The registration fee typically would go up by 1,500 rupees to 10 to 15,000 rupees in case of a commercial vehicle. For a two-wheeler, probably it will move up by a couple of hundred rupees. But still, it will hurt demand according to Nomura. They say that there will be an initial rush to buy vehicles to avoid the higher registration costs. However, they also do believe that the auto sector, which is going through a weak demand scenario already, might get further hurt because of the proposed measures which have been spoken by the government. So sentimentally, if you look at the entire scrappage policy plus the registration fee hike, the electric vehicle GST cut, net of net, Nomura does believe that wouldn't augur that well for the auto industry versus what the street was anticipating.
Yatin, thanks so much for putting all of that into perspective. Big moves, and of course we'll be talking to experts about this 8:30 and then later on in the day as well. So autos is the big talking point today, and Yatin Mota summing all of that for us. Keep in mind, I just think that a lot of auto stocks, or not a lot, but some of the auto stocks were active on Thursday and Friday, believing, because there's this talk, right, that maybe the GST Council meet does something for non-electric vehicle makers as well, and I think that disappointment might also weigh in. So you're looking maybe at a slightly weak start for some of the auto players in the session today. Let's wait and watch if that happens. We'll ask the expert about that. Lastly, before we end, first word, talk about the fourth important piece. Monsoon is seasonally weak for cement makers, and we all know that. This is reflecting on the prices. A survey of 14 dealers across the country shows that prices continue to fall for a second month in July. Nikki Mirchandan is standing by with the survey findings. Nikki, this becomes important because we haven't seen volume numbers that well. It was essentially led by pricing, and now pricing is also coming off.
Perfectly. You've just summed it all before I could start it off. But then, yes, pricing power was something which is lifting the earnings in Q1, or is expected to lift earnings for the remaining players. But then this time around, with the slackness that we're seeing in the seasons, which is not an offbeat phenomenon, because that's the trend which is catching up, but that pricing power also seems to be going away from the industry. So clearly in a tough phase right now, but let's look at the dealer survey here. For the month, all India basis, we've seen a 3% cut there. South and Western region, essentially, these are the two regions which have seen sharper cuts. It's been relatively lower quantum of price cuts coming in from North and East, and Central region, however, is holding up. So that's clearly the trend which goes behind the 10 rupee per bag cut that we've seen on all India basis. For South, it's the 4th consecutive cut coming in, 25 rupees per bag. In the last 4 months, as you can see, from April onwards to July, we've seen a 50 to 55 rupee bag per cut in these 4 months. That, to an extent, partially or more than half to a level offsets the kind of price hike that we've seen back. If you can pull that chart up, 50 and 25 in the last 2 months. So South, we've seen halting of government projects and the ban that we've seen for sand mining in Andhra, which is weighing on the demand for South players. And if you look at the next chart that we have, it's the other region where we have North, where the price cuts have been relatively, the quantum has been relatively less as compared to that of South. It's a ₹5 per cut per bag cut. Second consecutive month of price cut coming in for this region. Dealers, however, suggest that there could be more cut in offering for this region as a whole. Next in the list, we have the East India players, where the quantum, as I just suggested, it was South and East essentially, which has seen large quantum of cuts coming in. A 15 rupee per bag cut, second consecutive month here itself, and dealers do suggest further price cuts coming in. And fourth in the list, we have Western region, where the price cuts have been to an extent of ₹8 per bag. This is followed by ₹10 per bag that we saw in the previous month. Now, 3 reasons. We've seen the slack demand, the monsoon season, where the construction activity is a little low. You have liquidity issues, and you have slow real estate demand as a whole. These 3 factors essentially have been weighing on all the region, including the Western. Central region, however, that's holding its head above the water, or rather holding on the power, pricing power there. Two key reasons. We're seeing a strong demand coming in from Madhya Pradesh, and also limited capacity additions happening in for this region, on account of which we're seeing some amount of pricing power in this region, or rather no cuts coming in for this region as a whole.
Okay, Nikki, thanks so much for putting that into perspective. That's all that we have on First Word today, but lots more lined up on Indian Open. We discuss what to do in a scenario like this with specific companies. Rajesh Kothari of Alpha Accurate Advisors will be joining in. Decode the June quarter earnings of Kajaria Ceramics and KPIT Technologies as well. But after this break, a full tilt towards the day's trade.